What's going on, everybody? My name is Andrew, and today I want to talk to you guys about the recent flip project that we did in detail. And I want to do a numbers video where I'm going to talk to you guys about how we went through the project, what it is that we spent, how we calculate everything, how we budgeted everything, and how the true profit margins worked out. If you watched our previous video, I was talking about how we made $205,000 on this project in a period of 6 months of work. It did actually take 10 months close to close because of some starting delays and some selling delays, whatever it was. But either way, how you cut it, this is still a very good amount of money to be making, and it was super hands off. And that was one of the things I was trying to stress in the last video, is that when you are investing in real estate, in order to do it truly passively, you have to be able to do it like this on spreadsheets. If you're a real estate investor and you're doing this passively, you should not need to leave this spreadsheet. You should be able to budget everything, including people visiting the property and whatever it is. So we're going to get into it and show you how we budgeted every nickel and dime here. And you can look at how we go about calculating everything. So let's get into this right now. Okay, so first thing I want to show you is I want to show you this property which we purchased, and we have the spreadsheet here to calculate what our projections are. Okay, so as you can see here over on the right column here for E and F, we have all of our entries, and we take a lot of things into consideration, like what it is the cap rate that we're buying the property at, what is the projected sales price that we're aiming for, and what it was that we had purchased the property for. Now, as you can see here, we bought this for $615,000. We went through private financing, and then we went into the interest rates here, which is at 7%, and we're paying a 2.5% lender's fee. Now, these are actually pretty, in my opinion, standard. This is generally what we get in terms of our lenders. We can do 80% loan to value, but it will play with your interest rate a little bit right about here. As we go down, I'm not gonna spend too much time on each item here, but you can see that we have all the entry points such as closing fees, land transfer tax, monthly water, monthly gas, insurance, and all this stuff. Basically, we make sure to take everything into consideration here and what it is that we're going to be doing with all of it. We had essentially budgeted $75,000 to do a bunch of these renovations, and as you can see here, that when we take into consideration the landscaping and everything else, so the left column, by the way, B and C, these are the summaries, right, of whatever it is that we need to do to tell us how much money we need to be coming up with. Think about this whole spreadsheet here as a calculator, where you're using it to calculate how much money you're going to have to be coming up with, and then you go into your ROIs. But the right side is basically entries, and then the left side is more on the calculation side. So as you can see here, we have the purchase price of the property, and then we consider everything below it is essentially upfront costs. If we highlight these sections here, you should see it comes up to $643,000, or sorry, I'm adding the wrong thing in here. I should be adding this here. Yeah, $182,000, which is the same number here, and that is how much money we need to acquire the property. And then this amount of money is how much we need for the construction fees, and then this is how much we need for the real estate fees. We had a pretty simple battle plan here, which is just do one renovation of one unit, spend $75,000, and that's it. But because of when we bought this, because we bought this property in July of 2021, I think late July, early August, sometime around there, the market obviously swung up quite a bit. And so when we budgeted everything, we were planning on doing a lot less than we actually did, which meant that we had to raise money afterwards. Now, down here, I have cost summaries, which, takes all these things into consideration, like the mortgage, the property, financial related, the total cost for financing the property, and renovations and all that other stuff, and we have the margins over here. The way we break things down is like this. Our investors came up with $200,000, and we came up with $68,000 as part of our participation, raising a total of $268,000. Now, how do we come up with some of these budgets? Essentially, we know as a rule of thumb that generally speaking, one apartment unit will cost us about $50,000 to renovate, and that includes maybe some appliances. It's not going to be a super high tier renovation, but we're just talking about one apartment. If you're doing a house, then we budget about $75,000. This was supposed to just be a house. We weren't planning on doing an in-law suite, so $75,000 was about enough. If we sold the property for $800,000 and we subtracted everything, including our fees, our expenses, our real estate fees, and all that, we would have made this amount of money here. So total, we would have profited $31,000. Now, selling it for $800,000, that's a pretty low estimation. And when we make our pitches to our investors, we are always super conservative on our numbers, right? Because we always want to say, like, what's the bottom line? What is one of our worst case scenarios? How can this, what if things don't work out according to plan? Because we were actually thinking we would sell probably for around $900,000. And when we're talking about numbers like that, anything above $800,000 where the baseline is $31,000 here, that's all gravy. That's all extra money that we're making here, and we can like, anybody will be happy. So if you're raising money, our approach is to always under promise and then over deliver, rather than over deliver and then have people disappointed with you when you don't end up delivering what you said. Now let's look at what things actually turned out as. We sold the place for $1.13 million. Now, when we're talking about selling the place for $800,000, that either means we're really bad at budgeting and projecting, or the market just really picked up, which it did, but comparably, what would we have made? So here's how things actually turn out. We can talk about how good or bad our projections were. Our acquisition cost stayed the same, but you see the cost here for renovation actually doubled. We went for $75,000 in our budget to renovate to $150,000 to renovate. And that's because of the way the market was going. We decided to go for higher end finishes. That's all part of the pivoting point when we're talking about the renovations and the project management. When you go in there and you decide that you're going to do more, you have to be looking at the market and stay current with your numbers. We were seeing there was an upswing, and we're seeing that there was some really garbage products selling for very high prices. So we decided that we're now going to take our original plan and make a more premium product and sell it for what we feel was top dollar in this case. And that's exactly what we did here. What are some things that we calculate? Because again, one of the things that I think a lot of people don't talk about when they're talking about their final sale numbers is they're talking about commissions, especially when realtors are the people who are flipping the properties. I'm not a realtor. And so I write this thing as an expense, although we do have a real estate team that we work with. So we do sell our own projects, but $45,000, half of that is paid out roughly, so that doesn't all go to us, but there is still work in there. The realtor does pay for staging, and the realtor does do a lot of marketing. Some people think it's easy, but this is all something that you need to make sure is paid. And the whole thing about people being paid is that you should never have a plan that requires favors. Everything should be budgeted. Sometimes people go into partnerships, and that's what we want to talk about here too. Look at our partnerships here. Our partnerships, everybody has a percentage share. These people who invested 150 here own this share of the profits. These people who invested 50,000 here own 13%. And then the title holder holds 10%, the project management holds 15%, and then whoever's participating here owns 19%. So everybody has a share. And if they don't fulfill the responsibilities, you have to have that budget to pay them. So you either qualify it as a percentage at the end, or you qualify it as a share. And if they don't perform, they are not entitled to that share. You get to substitute them out. So sometimes people, when they budget these things out, they budget them as if they're requiring favors. Like, oh, I've got a cousin who's gonna help us and cut us a break on the construction work. Your cousin is not scalable. And on top of that, if your cousin has a higher paying job somewhere else, guess what he's gonna do? He's gonna go take that higher paying job. So you wanna make sure to budget these things out properly and make sure everybody gets paid properly. And that means that you have a good enough system, and that's how you can make sure to do this. As you can see, when we're calculating our profit margins here, we took out the operating, we have the operating income added in here, but we also took out the cash call, which was the extra funds that we had to pitch in. And we also took out the taxes, which is calculated at 26.5%. Now, if you're doing this through a corporation, you do have to calculate some taxes depending on where you are. We are at about the 26.5% mark that we have to calculate, and that's how that works out. And basically, when we pay everybody out, look at these ROIs. They're making like 57% return on investment. That's crazy. Somebody put in $150,000 and made $85,000 on their money. That's nuts. You know, who's doing that, right? In a secured and controlled manner. Now, yeah, I know a lot of people did make money in the recent upswing for real estate, but these returns are still very impressive in my opinion. This is not our goal. What we aim for is actually more reasonable returns like here. Actually, we aim for something in between. Usually where we perform is actually at roughly the 20% mark in terms of the ROI. And that's what we usually do every 6 months. This time there were delays and we did make more, and we're pushing 60% return on a project. but that is not normal. Usually we're doing 40% in a year or 20% in like 6 to 8 months, something like that. And that is more reliable. And that is what we generally give to our investors, and that is what they're happy with. But this is a home run project. And what I want to point out by this is that when you're flipping properties and you're getting greedy on, how much money you're going to make, it's just like, is there enough margin here? You have to understand that not every project is going to be a home run. And if you are interested in getting into real estate as a business and doing this thing, you have to remember that some projects are not going to work out as well and others are going to work out very well. Just be reasonable about your expectations, and if you build a team where you're paying everybody properly and everything works, you will be successful. If you're always squeezing people who are below you in terms of who you're paying, you're squeezing your contractor, you're asking your realtor to cut you a break on their percentage for their commission, you're asking your lawyer to give her a discount. If you need everybody to give you a discount in order for you to make money, you're doing something wrong here. So you want to balance these things out a little bit and make sure that you calculate things accordingly. I do think that this will give you a general insight into how we break things down, because we do want to make sure to calculate everything as accurately as possible, and we use these type of sheets almost like a calculator to do our projections and make everything work out. So if you have any questions about this, feel free to drop a question in the comments below, or we're going to leave a phone number on the screen here that you can text, and we're going to make sure to answer any and all questions that come our way. And if you want to know how to make some of these for yourself or run your own projects, with me, and I can help you out with that, I'd be happy to do so. So make sure to reach out to us for any of that. In the meantime, like this video, subscribe to their channel, and make sure to keep on hustling.